What's going on YouTube? Hayden back making another brand new Crypto TV episode. In today's video, we'll be looking at Litecoin, Bitcoin, Ethereum, as well as XLM to BTC or Stellar Lumens to Bitcoin. As always, if you guys are new to the channel, make sure to subscribe, turn on post notifications, leave a giant thumbs up if you like the content. If you like my Crypto TV merchandise and you want to buy some for the holidays, the link is in the description below. Pretty cool. Otherwise, as you guys saw in the title, we're going to be talking about what to do if you bought cryptocurrency, Litecoin, Bitcoin at the top, and how to potentially make your money back or set yourself up for a better position going into the future. Something called dollar cost averaging and a few other things I'd like to touch upon. We are going to be looking at Litecoin's technical analysis and cryptocurrency's technical analysis, as well as the cost averaging. But for those who decided to watch basically trying to just learn about what today's market looks like, as you guys can see here, we have a market cap of 102 billion, 24-hour volume of 12.1, and a Bitcoin dominance of 55.1. So we are seeing an increasingly growing Bitcoin dominance. We saw it at 49.9 yesterday, now at 55.1, up 0.2%, but we're seeing it grow. We then see a 24-hour volume of 12.1, which is also slightly higher than yesterday, up around 1 to 2%. Yeah, 1 to 2 billion, 1 to 2%. Not 1 to 2%. But the market cap is also 102 billion. So it's quite lower than yesterday as well. 3 to 4 have left. 3 to 4 billion have left the market cap. So we're seeing cryptocurrency get hit. We're seeing it fall. And that's kind of nervous to some people. It gets people kind of nervous, and it scares some people. It shocks some people. And I'd like to kind of touch upon what you could do in that kind of scenario if you are very anxious and nervous and upset that you lost a lot of your money. If you're glued to your screen, if you're setting, alerts to wake up at 2 a.m. every morning, that's not good. We do have to discuss what you can do to even out your portfolio. So as you guys can see, majority of the market, though, is in red. Almost every coin is in red. There are a couple outliers that are up some, but things seem to be down like 5 to 15%. Top 10 cryptos, you can see Bitcoin is down 5%, 5.2, XRP down 5.6, Stellar down 11%. So that's going to be interesting to discuss. We then see Litecoin at 5%, Bitcoin SV down 10%. A lot of things are down. And by down, I mean down a lot. So it's actually quite interesting. XLM, I believe, dipped below what we have drawn, but we're going to discuss whether or not it's going to pull back up, retrace back up, or stay this bearish. But so I want to touch upon dollar cost averaging, and I have an article on Cointelegraph. It says Bitcoin secret function, dollar cost averaging. What is it? How do we use it? So it does give some pretty cool examples, and there's a quote by Baron Rothschild, and hopefully you guys know who the Rothschild is. They own a lot of money, a lot in the banking system and stuff like that. They say, buy when there is blood in the streets, even when it is your own. So even if you messed up on a trade, still buy in at lower prices, you can make your money back. So this is an old saying that relates to stocks, but it also holds true for a number of commodities that endure drastic price swings, such as gold, oil, and even food. This is also true for Bitcoin or cryptocurrency, Litecoin, whatever you want to do. It says, whenever you read blog posts like Bitcoin price crashes, Bitcoin is doomed, that means that there is Bitcoin blood on the streets and it is time to buy. It's considered a sale. But how do you know when to buy and how much? What if the price continues to drop after you buy? And who wants to be buying when the price is falling? It doesn't sound that right. So it has an example right here. It says what Peter is talking about is managing a business, but the same is true for managing your Bitcoins. Allow me to explain something called dollar cost averaging, or DCA for short. You can see what gets measured gets managed. So this is a very good example, and a lot of people were confused, and I feel like this will help you understand how Bitcoin and cryptocurrency works. Or for those who want to even out their portfolios, this is a good example, especially if you bought cryptocurrency up at $400, Litecoin at $400 or $250 or $300. This is a really good method to even that out. So it says, here's how it works. Let's say you bought one Bitcoin when the price was at $500. This means that your average cost per Bitcoin was $500. As we all know, the price of Bitcoin is below $500 today. So let's just say. So obviously this article was made back in like 2015, so that's why it's referencing such low numbers. And you could be quite surprised. This wasn't back in 2015, and people were worried about where cryptocurrency was. So put this in perspective too. Bitcoin back in 2015, when they made this article, people were very nervous and afraid because they bought a Bitcoin at $500 and then it fell all the way down to like 250. So people were very nervous. You know, is it ever going to go back up? Look at it now. You know, if you bought it at $500, it's over 3,000 now. So you made like 5 times your investment. So in the long term, you could see a huge spike. So even with this dip, we are still up significantly from when it was 2015. But let's continue. As we all know, the price of Bitcoin is below $500 today. So that puts you at a loss from what you bought. So if you bought Litecoin at $400 and now it's at $200, that puts you at a loss. It says, as I'm writing this article back in 2015, the price of Bitcoin is around $220. So if you bought one more Bitcoin, you now have 2 Bitcoins and you've spent a total of $720, a 220 Bitcoin and a $500 Bitcoin. So you have spent a total of $720 on those 2 coins, which means the average cost of your Bitcoin is now $360. So you bought $700, 720 total divided by 2. Think about that. You bought one at $500 all the way up here, and then you then bought one at $220 all the way down here. You now take the middle. That's your break-even point. So you can see how that could apply to Litecoin and cryptocurrency. This is where the saying, buy when there is blood in the streets, came from. It means that as the price falls, it is on sale, so to speak, and you should be buying as you are greatly reducing your cost per unit and setting yourself up for increased profitability later. Now, let's say you bought another 4 Bitcoins at $220, each for a total of $880, each for a total of US dollars, 880. Now you have 6 Bitcoins total for a total cost of $1,600. So you have a $220 Bitcoin, 4 Bitcoins at $220, and a $500 Bitcoin. That just means that your US, dollar cost average is only $266 per coin. So your average cost per coin is much less than your initial buy at $500. So you're watering down that outlier. You can see. So if you buy a lot of coins low, that $500 one that you bought all the way up here is now worth a lot less. It's a lot more watered down. So it says, most of us, however, aren't buying in single coin increments, so the math gets much more tricky when you receive weird numbers like 0.9641701. This method is how a number of gas stations purchase their gasoline and how some restaurants purchase fish, because market prices for certain fish fluctuate in of the supply and demand. So that's pretty much it. It does get a little more in depth. I don't think it's that necessary to discuss. We can kind of briefly look through it. It says, as long as the price of Bitcoin is below your average cost, you're in an acquisition phase where you buy and or keep larger percentages of coins that you receive for goods and services. When the price is above your average cost, you enter a utilization phase where you use your additional purchasing power to spend and get more goods and services for your money. When enough people are doing this, this will begin to see an upward trend in Bitcoin's value because fewer people are selling off their coins in some sort of panic, and more people are establishing Bitcoin savings. Widespread use is what really scares the bank, and if people utilize dollar cost averaging, more people will hold onto their coins. Bitcoin price will likely stabilize, and a large number of people will realize that they don't need a bank at all. This is bad news for banks and the accompanying fees. So, bunch of information like that. Hopefully that helped you understand dollar cost averaging, a way to save money. And then otherwise, if you noticed, that article was written back in 2015 and now it's 2019 almost, and you can see the price went from $500 went all the way to 20 grand and is now at 3,000. So you're still at a profit holding it long term, holding it three years, because we hit at end of 2017. So holding it 3 years, 15, 16, 17. And the price shot up 3 times, 5 times. It's what it was currently when you first bought it. In 2015 you bought it at 500. Now it's 20,000. That's a huge difference for holding it long term. That's why people say don't worry about it, because long term it seems like the trend is still going up, even with a correction like this. Litecoin, though, on the other hand, is on the weekly still in a downtrend. We are trading at a support. The weekly candle we still have tomorrow and Sunday. We'll see if we can correct upwards. We're trading pretty darn low in terms of our relative strength indicator. We are also below our high-low MMA, that green band. There are so many indicators right now that's telling me that we are due to pull back up slightly. Even if we don't go off on some massive, bull trend, the fact that we are so low makes me think that even a retracement or a correction back up to neutral levels at like $60 is huge. If Litecoin went from $20 to $60, that's 3 times your money that you put. You put in 10 grand, you're coming out with 30 grand. That's huge, So it's an interesting chart. We're quite low. I think we are very long term, looking quite nice. I think short term, we have a little bit longer to go with these lower levels, and then I think we're going to turn around and start heading back up. So I do think overall we look kind of nice, kind of fair. Same thing with Bitcoin. Bitcoin is also, you know, trending almost as oversold on its relative strength indicator. You can see it broke bearish from its descending triangle. Its downtrend fell, hit a support. You can see where that support is right over here, and I think that's going to be the lowest. I'd be very shocked if we fell lower and actually entered extremely oversold on its relative strength indicator. So I think that's the bottom. I'd be very shocked we head lower, but I think this might be where it goes. You can see where that candle tested. We'll see if we head lower. You know, the next support, you know, would be all the way down here at around $2,500. So is it possible to sink another $675? Yeah, but is it likely? I don't think so. Be very interesting because we would also be extremely oversold. Same thing with Ethereum. So I know I am making this quick, but Ethereum is also entering oversold on its weekly. It is semi-breaking bearish from its downtrend. You can see I'm drawing this out, what I'm referring to. You can see it's touching a support right here. It's probably going to trade out sideways on its $82, $83 support. Trade out sideways, touch that. We'll see if we can finally break bullish from that. And I can still see a massive moonshot all the way up to like 280, you know, adding $200 to an Ethereum token. And then XLM is now breaking bearish from its, you know, ascending, or its Elliott wave that we drew on. You can see when we approached 4, I was anticipating a pullback downwards. That's what happened. It seems like we're falling out of that. There is a support here. It seems like we're touching the same support as where we were at 3. We were also at support over here back down in July 2018. There was also some support here, but for the most part, I wouldn't be surprised if we see this candle retrace back up. I'd be shocked if we closed out of it. It seems like that's what it's going to do, but it would look a lot nicer if it retraced back up into here and then we continued upwards. But I do think this market is definitely headed back up sometime soon. But that's going to sum up the episode for today, guys. Hopefully that helped you. Make sure to like, comment, subscribe, turn on post notifications, leave a giant thumbs up if you like the content, and I'll see you guys in tomorrow's episode. Peace.